Alright guys, welcome back to AWM FX. Good morning, good afternoon, good evening, or good night. So today I'm going to show you a very short video explanation about trend continuous using confirmation of trend line. Alright, so since I already touched about trend line, so you can use this as a confirmation to strengthen your trade. All right, so first of all, we'll go back a bit to the basic. All right, we go back to a bit to a basic. So let's assume, right, a trend is going uptrend. All right, it's going uptrend. Let me use this. All right, so it's going uptrend. So what happened is that we'll look for, or should I say, we'll draw a trend line. Sorry for that. We'll draw a trend line. Right. Let's assume this has not happened. Then, let's change a bit of the color. So what happens is that we are looking for the price to come back down to this area for the last rejection. So it's 1, 2, and 3. All right. So hopefully you guys understand that. It's 1 rejection, second rejection, third rejection for the trend continuous of a bullish over here. So what happened if for the bearish, if this is another trick that I told you, just put inverse. So this will be the bearish. All right, if you're looking for bearish, you just need to look for the first rejection, second rejection, draw a line, and then the third rejection. Right, so this is how you draw the line. For a bearish, you draw it on the top. For the bullish, you draw it on the bottom. Right, so what happens is that what I'm going to explain here is that there are two kinds of trend continuous. Right, not all trend continuous it happens this way. Right, sometimes it does not happen like this. Sometimes it happens more perfectly. So let me draw for you. What do I mean by more perfectly? It will be something like this. All right, and then going up again, that, and then it might drop back again to this area for trend continuous. So it will be something like this. Right. Let me get the line correct for you. It will be something like this. Maybe like this. Right. So it's the same. You're looking for the first, second, and third. All right. First, second, and third. So of course, if you ask me which is my favorite, this will be my favorite. This will be my favorite setup. Reason is that this is more obvious. This kind of setup is more obvious. This is what we call it as a low risk, high reward, and this is we call it a very very strong trend continuous. All right, whereas this will be a medium mode. All right, this will be the medium and what they mentioned. All right, this will be the best setup. Right. So what happens is that what you're gonna look for this kind of setup is that during this movement, right? During this movement, there might be a smaller movement over here, right? There might be a smaller movement. No. Sorry. Right. There might be this kind of small movement, right? Then drop. Sorry. I'm not used to this kind of drawing. I think I'm gonna go back to the basic of this. Alright. So there might be a movement like this. Alright. So what happens is that your entry area will be at this point. This is what we call it as a small QM. Right? It's a small QM. Let me make it reverse so that you can see clearly. Okay, this will be like a small QM. Right, going down, then slowly climbing up. So when the price went up, there is a small QML over here. So your entry point will be at the QM level. All right, will be at the QM level. All right, so this is the kind of the trade, one of the kind. All right. So the other one that is my favorite, and always I will say that no, I wouldn't say always, it will be around 75 to 80%. It works. All right. It works is that when the price, okay, making a trend continuous, this is a kind of setup that we call as a SPR or RBS. All right. In this case, this is a resistance becomes support. This is SPR. So what happens is that during the break of this movement, all right, of this area, this movement has to be a few criteria that I mentioned before. First is the clean break. It has to go up clean break, right? Clean break. Then along this area at this point, right, at this point, what you will notice is that you're gonna have a bearish engulfing. What else? Bearish engulfing, and then supply zone, and then of course there's another one we call as decision point, right? Go back to some of my videos that I explained it previously. So in this case is that once we have one, if you do not know, have no confidence, don't worry, there will be another one. This is the one that you want to catch. All right, you want to catch. Okay, don't worry about you're gonna catch it late. All right, reasons is that because your stop loss will be very, very small. Even though it just move, maybe I'll draw it something like this. Even though sometimes you just move this until the high at this place, but it is more than enough because your entry point or your stop loss is very, very small. So this kind of movement, let me make it invert so that you can see clearly. All right, now you guys might take note. All right, so I'm gonna explain it first. Make sure it's a clean break. All right, then there is some movement, some pattern over here. So preferably is we call it in this case it's a drop base drop. Okay, drop base drop, or this is a supply zone. So if I make it normal, this will be a rally base rally, and it will be a demand zone. All right. So what I mean is that this kind of setup is very, very good. All right. It's because that there is a lot of strengthening factor in this movement. All right. You have a lot of factor that makes it happen. All right. First is that when the price break, it will form a zone at the break at the break of the price. So now in this video, I won't show you any example. I'm going to show you some theory first. So what is the best kind of setup? Okay, another tips is that when you switch it to line chart from the candlestick chart, you switch it to line chart, you will see that at this area it will form a very, very nice A sharp, very sharp A hit. All right, so if it's on the sell, all right, it's on the sell at this area, or at this area, it will form a very, very sharp B. All right, make sure it's very, very sharp. We don't want that those kind of movement that looks very blunt, something like this. No, this is not what we want. Remember that we want it very, very sharp. The sharper it is, all right, means that there is a very, very strong rejection, sometimes like that. Ooh. It'll be very, very nice. All right, so this is a hint for you. Hopefully you guys learn a few simple tips or tricks about how to trade trend continuous. So this video will be all about theory, trend continuous trade, either this kind of movement where the break, right, the rejection or the rejection area is not at the tip, right, then you look for a small QML. All right, it's a small QML, maybe go to lower time frame. So my favorite will be this kind of trade where price is very obvious, and then of course if you draw a trend line, you can see that the third rejection is just along the trend line, right? And how you draw a trend line? Trend line is that do you connect all the shadow or all the body? It does not matter. right? Trendline is not really that important in this sense. You just need to have a guide for the price for your own for yourself, okay, as a guide. That's all. All right, hopefully you guys picked up a few tips or tricks about trading supply demand advanced method using Trendline as your confirmation. All right, so see you guys next time. Bye.